Good evening. Today is September 27th, 2019, approximately 9 p.m. Eastern Standard Time. My name is Olawale Okabola with Spartacus Trading Corporation, here to bring you a prep report for Monday, September 30th, 2019, almost at the end of the month. I apologize for not producing any reports for this week. I had a family emergency that I needed to attend to. Okay, let's kick it off. I'm not going to do a recap from today. Today we know it was China news. We can look at the profile quickly. It was some China news that got the market down. So we'll kind of talk about today as I get into the report later. So let's start the prep report for Monday's trade. Looking at the monthly chart, we are still one time frame and higher by only 1 month. We're in a 2 month balance area because this month is still trading within last month, which is August. Although we breached August high, we're back within August range, so we're in a 2 month balance area. So not much to talk about on the monthly, except that on several reports that I cranked out 2 weeks ago, a week ago or so, I talked about the importance of watching this 2 month balance area. This is for a time frame longer than the day time frame, so please keep that in mind. Once September is open, I'll really dive into this 2 month balance area. But I talked about how the market tests again after we broke out, traded down, closed, then the market broke out again at the beginning of this month, being September. Well, not at the beginning, but at some time this month of September, broke out. The key was to stay above and keep going. However, we're back within this range. For now, the key is, do we close back within, or do we somehow get out and close out and continue to move forward? The reason being is, if we close within, we're basically talking about a breakout failure on a time frame higher than the day time frame, looking at the monthly chart. And if we apply the balance rules to this balance area, the market could possibly test this low. But that's something that we'll address at the end of the month of September. But just please be aware of that. Going to the weekly chart, we are in a 1, 2, 3, 4, 5, 6, 7, 8, 9. Looking forward to next week, that makes 10, a 10-week balance area. Reason why it's so many weeks: this week closed within this week closed within that week, this week closed within that week, so on and so forth. Even though we broke out of a multi-week balance area, this week still closed within this week. That makes that a part of this whole balance area. And this week closed still within this week closed there, so on and so forth. One thing to pay attention to: we had a multi-week balance area, we broke out, we were making higher lows. But now, since last week, let's see, this high is 23, this high is 24. Okay, so starting this week, we were unable to continue the momentum to the upside. To this week, definitely did not, as you can see, uh, breach last week's high, and we breached last week's low. So going into next week, do we make lower highs? That's the question. Also, breaking out of this, let's get my line right. Breaking out of this multi-week, one, two, three, four, maybe five, because we opened back within, broke out, balance area. Normally, the first test from a breakout of a balance area, you can count on the bounce. You got that bounce. I did not trade this week, so hopefully, one of you guys were aware of these principles, and you were able to take advantage of it on that break from today. But nevertheless, usually when you break out from a multi week, day, month balance area, the first test is usually buyable. We came back within, even though we had a liquidation today, or a sell off, a wannabe sell off is what I call it, from the China news. It would the game's still on. They bought right off it and closed above. My question is going into next week, or something to look out for going into next week. Do we get back within this range? If we do, this is another situation where you apply the balance rules. The balance rules is break out and accelerate, break out and fail. In this case, we broke out, but we're coming back. I don't know if the market will bounce on a second test, but usually a third or a fourth test, you're coming down. And if you do, that's a breakout failure. The destination trade, which is only a destination, is to the prior low of that range, which the low would be right down here at a 28.21 quarter. So it's something for us to watch. We want to definitely pay attention to this breakout, this high of 29.45, to see what the market is going to do. So again, this is a time frame higher than the day time frame, but you definitely want to be aware of what the time frames are doing that are higher than the day time frame. What are they looking at? So that way uh, you can position yourself to take advantage of some potential great moves. So that's what's going on the weekly. On the daily, as you can see, we talked about that multi-week balance area. Fits perfectly on the daily. We broke out via a gap. Oh, excuse me. On the daily, this is what's going on. Remove all drawings. Okay. We tried once. We got in the gap. The market rallied. Then today, we got back into the gap. The market rallied again. You got to figure if we can take out Friday, today's low, which is Friday's low. If we take out Friday's low, there could be a move to the downside to at least fill this gap. Filling this gap puts us well within this multi-week balance area, as you can see from my line. And if we close the gap, which the gap is here at this high at 29.40, we can see it better on the profile. But nevertheless, we close this gap, then we are back within that balance area, and then you can apply the balance rules to that. But you just have to continue to monitor on a daily basis. It sets up really an excellent swing trade for those option traders who like to just basically do swing trades. Well, then it presents an asymmetrical opportunity to swing it all the way down to the low, at least the destination. You got to continue to monitor down to the balance area low. All right. Also on the daily, I'll call today a suspect outside day because we opened, and we'll see it better on the profile. We opened a tick or so below the high. Usually an outside day, you open above, you close below. So I think we opened a tick above or below. Let's just look right now. Okay, we opened a couple of ticks, one tick below the high from yesterday, going back to the bar charts. So it's not technically your true outside day, but it's suspect because it's on the borderline, it's in the gray area. And then we also closed, I believe, outside of Thursday's range, Thursday being yesterday's range. So it's pretty dark. It's pretty close to an outside day. I'm just going to, by theory, it's still a suspect outside day because it did not open above, although we got the close just outside of the range. So it's something you want to pay attention to. The theory behind the outside day, if you open above, close below the prior day's range, normally that's a sign for more continuation to in whatever range, in whatever direction the market closed. So in this case, if we opened above, which we didn't, only by a tick, and closed outside of yesterday's range, it signals continuation to the downside. So it's kind of what I'm just going to call it, a suspect outside day, and something you want to watch. As far as a trend, I think you all can see, although we're not one time framing on a daily basis, the trend is down. The trend is down on a daily basis, on the day time frame. So just something just to pay attention to. The day time frame trend is down, although we are not by definition one time frame and lower. All right, real quick into the profiles. Basically, at the end of the day, you want to pay attention to this rally high at 65 quarter. This is the last high before the market, before the market closed. So I'm going to focus in on this rally high for several reasons. Although the day was, it wants to show as if it was a weak day. Um, it wasn't that weak because value, as you can see, or if you look at this chart, value is only overlapping. It's not like we have lower value or clearly lower value. So that's something to pay attention to as you're going into next week, looking to just, close your eyes, bite down on your mouthpiece, and short the market. You want to be very careful. The market is really showing me that it's not that short. Um, or it's not that weak, I should say. The range is 43 points. It's a pretty decent range, but the volume is very light. 3.2 billion shares on the New York Stock Exchange. That's very light for the range. So that does not really, the volume really does not support the move down, although we have a rally back up. The day points to the downside, right? So it's something you want to pay attention to. And given the range, we can very well have a chop day going into Monday because there is no news, any economic news that's coming out. So the market can try to just uh, balance this uh, balance this daytime inventory and figure out what's the next move. Now we got a lot of geopolitical stuff going on in the market, and so when I give my analysis, it's with the caveat that um, geopolitical trumps everything. Okay, so if the market's trading on its own, these are the type of things we'll be looking at. And if there's something else going on, then you know that okay, all bets are off, and we want to kind of quickly scramble and use the longer time references, the weekly and the monthly references, to really get a handle on how to play how to play the how to play the market. So nevertheless, I'm paying attention to this rally high. I want to see where does value develop, either above or below this rally high. Looking at the bar chart, because the volume is light today, the market closed not that far off from the halfway mark. This green line here represents the halfway mark, half back. So the market can trade either way. If value begins to build below this rally high, then I want to see the market begin to chew into this excess low, because the market is showing an excess low on my the chart on the left hand side of your screen. I want to see the market begin to chew into this excess low. The market can chew into this excess low. That is set up for a possible trade to get into the gap and then fill the gap, which is, we got like 6 points, with 6 points of juice within this gap. We fill the gap from economic news, China, who cares, whatever, and the market wants to continue lower. We got a very small range that the market can easily shoot through and possibly touch this point of control. What did I talk about? 29.45. Let me go ahead and mark that on this chart. 29.45. So 29.45 represents a re-entry into this multi-week balance area. Okay, so it's something we want to pay attention to for a time frame longer than the day time frame. If we can get back within, that plays right into the gap, getting inside the gap and filling the gap, that definitely puts us back into this multi-week balance area, which you can't see probably, yeah, because it's back in August and stuff like that. So puts us back within here, and that could signal more continuation down over the days to possibly challenge uh, the balance area low. But you got to take it a step at a time. Also, a warning for any downside trade. The VIX wasn't that impressive on the sell-off, and if the market was really weak, there's no way we're going to rally. Well, we should not rally all the way up to the um, all the way up to at least near the half back of today. So you just want to apply some caution. I think you want to wait for the market to shake out Monday morning. let it shake out. All depending on what goes on in the overnight and any geopolitical news that happens over the weekend. But you want a market to kind of shake out, and then using the references I'm sharing with you and monitoring where it's value developing in relation to these references, be able to get yourself on board and take advantage of the opportunities the market presents to you. So there's a lot of information. I strongly suggest you watch this video a couple of times, take your notes, make sure you are ready to go. This is Olawale Okabolo at Spartacus Trading Corporation. Good to be back. Everybody have a wonderful weekend.